Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how you going? Thanks for joining us on the podcast today. I'm going to get straight into it. Normally have some sort of long preamble where I try and find some segue into having a chat about what the topic is today, when often I don't actually know what the topic is. And today I'm not too sure, but we'll work it out pretty quickly. In the studio, Ben Kingsley. He's the chair of PICA, which is the Property Investors Council of Australia. You might also know Ben. He is the Managing Director of Empower Wealth. He's also one of the co-hosts of the Property Couch, the other good property podcast in this space. He's been on the show before. Ben, how are you going? You well?
G'day, Phil. Good, thanks.
So we're getting to the pointy end of the election, right? Mm-hmm. Here we are. We're recording. The election is literally not this coming weekend. It's the weekend after, I believe. I got that right? Yes, I do. Ben's nodding. And we're sitting there going, what's going to happen? Now, over the weekend, I saw the Labor Party had some big launch of whatever it is. He's been campaigning for a while, Bill Shorten, but he rolled out a couple of the former Prime Ministers. I saw Gillard, I saw Rudd, I saw Keating there, and everyone was backslapping and looking pretty happy. Subsequent to that, I saw the news over the weekend, and you had Morrison there sort of dismissing most of it and giving it a hard time. So it's an interesting time, Ben. Who knows and how Australia is going to vote? I'm not too sure, but let's bring it back to what it means for property investors. You've been very vocal about this, and I think you even copped some flack from the shadow treasurer a week or so ago with some of the numbers you were banding around when it comes to the impact of some of these policies they're putting in. Just give me a quick 101 on where your head is at with all this right now.
Well, I think the first thing we need to say is that this is not about the political party. This is about one particular policy. It's their housing tax policy that I'm not a big fan of in terms of Labor's policy, in two parts, obviously the negative gearing part and also the capital gains exemption part. So I've been playing the ball, not the man, and the fundamental concerns I have with it is that it's detrimental to the property market, which subsequently is detrimental to jobs, which is detrimental to the economy growing, which is detrimental to prosperity and the standard of living. So I think the intentions of looking at this policy originally, where they were thinking they had this amazing policy, like it was like a win-win, where they had the argument that they were going to keep housing more affordable and also spin off all this new revenue, these tax receipts, and that was going to be great for all of the schools and hospitals that they wanted to build. Only problem, Phil, is they had their numbers wrong, and they weren't just a little bit out, they were significantly out. And what I'm referring to there is they thought that the 7% of all investors bought new property and the remaining 93% or whatever it was bought existing property. So they thought this is going to stimulate all these property investors to go and rush off and buy new property. And the reality is they're already buying around 40 to 45% new as it stands. Yeah. And so they had the Parliamentary Budgeting Office do some modelling, which is what they were sort of using for their $35 billion in forward estimates of tax receipts. Bottom line is this, is that those models were built on moving from 7% to 22%. So the models fall away completely if it is 45%, because effectively it won't have any stimulus, it won't have any growth in jobs, it'll just put property prices to a lower valuation, and as people move their money into other investment classes, it'll make the supply side lower, which means higher rents. So it's not good.
I listened to a podcast, and it was one of our products under Momentum Media. It was Mortgage Business Uncut, which I think you're probably familiar with.
Yes.
And Annie Kane, who's the editor of that, spoke with Christopher Joyce, who is an economist. He's a columnist on the Australian Financial Review, really bright fella.
Very clever man.
Yeah, yep. And I don't know if you listened to that podcast. They had a pretty good conversation. It was a far-reaching conversation around the election and mortgage broker remuneration and
I read the article.
Sort of stuff.
Yeah, I haven't.
He did a piece in the Fin around it.
Yep.
And his view, and to summarise, was that should the coalition government remain and the Morrison government be re-elected, he reckons a housing recovery will happen quite speedily. And he thinks the opposite will happen if the Labor government comes in. Now, the purpose of this podcast is not for me to express my own personal political views, and I don't make them available or open to anyone. I am completely non-partisan. I'm just a provider and a conduit of quality information, so you can make more informed decisions. But I saw Bowen on Q&A last week. I don't know if you caught that. And I was listening to his rhetoric. He was up against some of the Liberal Party. I think Fifield, who's the Minister of Communication. They had a good old spar. And I listened to him, and as a bloke from Blacktown, right, who are from a heartland of Labor voting, and I've had family votes for Labor I don't think anyone's ever voted for Liberal in my family. I sort of sit in a quite interesting position where I have a foot in both camps, and I understand and appreciate some of the Labor policies around housing affordability, ensuring that wealth is redistributed and that every Australian has a fair go to be creating a great life here in Australia. That completely ticks all my boxes. Then I sit on the other side as a guy with a reasonably large property portfolio and running a business, all this sort of stuff. I go, yeah, I'm not too sure about all this. So, when I listen to Chris Joy talking about housing recovery under a coalition government, works for me. When I talk about or I think about the impact on negative gearing, now I don't invest for the inverted commas of a strategy of negative gearing. We'll touch on that in a second. But I don't know. I don't know what to do. I've just got all this information. I'm getting shouted at by both sides of government. I don't know who to understand or who to listen to. Do you feel the same, or you're pretty clear about how you're going to vote and why you're going to go that way and what you're sort of communicating with people that you were connecting with?
Yeah, so, I mean, Phil, I'm on record as saying that for the vast majority of my life, I've voted Labor. I came from a working class background, my parents and so forth, and so for a long time there, I was a Labor voter, and now you'd probably class me as a swinging voter because in the state elections, I've voted Liberal. In the election that the Andrews government decided to not build the East-West Link, I thought that was economic vandalism at its best.
Yep.
So I
spoke with your feet. Yeah.
Yeah. I mean, ultimately, that's the opportunity we have as voters in this country. It's compulsory to vote, so I can donkey vote. But if there's something that grabs my attention, I'm going to go after it. Now, in this particular case, in the federal realm, yeah, I'm going to vote Liberal. It's pretty clear. I just happen to be in Bill Shorten's electorate, so my vote probably doesn't carry as much weight as what it's going to be in other parts of the country.
So what's the and today you're here to have a chat with us as the chair of PICA, and just quickly for those people that don't know what PICA is, what is it?
So PICA is the Association for Property Investors run by property investors. So Phil, about 2 years ago, we started to see that there's over 2.1 million property investors in the marketplace, and they have around 2.7 million properties under management. So they're the biggest landlords in the country. They provide an incredible amount of housing for renters. In terms of the amount of public housing and social housing, it's just fallen off a cliff in terms of the investment at state government level. So there's a lot of changes that have been going on at the federal and state level around property investors, and they're getting a bad rap, right? There's a bit of a image problem that they've got out there that they're greedy property investors, and that hasn't been helped by effectively the miscommunication that's being sprouted about the sixth and seventh property or fifth and sixth property, when the vast majority, in terms of almost 72% of people only own one investment property. So if we put it into real context, and effectively 9 out of 10 only own two. So I'm a great believer in everyone having a fair go. I mean, as someone who's voted Labor, you do think that. You think you want to give everyone the opportunity. So I don't mind the rhetoric around fair go, but I also, as someone who's also a business owner and someone who's having a go, which is what a lot of property investors are doing, they're sort of saying, it is to be, it's up to me, and I'm going to try and lead by example for my family and provide for my family in the short and longer term. And with that comes a bit of sacrifice. Yeah. So the question of the redistribution of wealth, it's sort of an interesting conversation in my mind. I don't want to be in a country more so where there's a reliance on the government doing most of the heavy lifting for its people, right? Yeah. I think if we work hard and earn well, that we should be able to enjoy some of the fruits of those labours, and that's that in circling back to the negative gearing policy, the irony of this policy for me is that the communication from Labor is we're going to stop the person buying their fifth or sixth property and give everyone a fair playing field. But the reality is the policy's not doing that at all. The policy's saying that if I've got high income, I can still do it, because negative gearing is not a strategy. It's a moment in time. In the early parts of investing, I may have a loss, but over time I'm going to turn that to neutral and positive, yet I'm going to pay tax on that. So that's where I get annoyed by their positioning of this policy. What it does is it robs average mum and dads, typical Australians, the Labor heartland, of the opportunity to invest in property, because that little bit of extra cash help that they get in terms of being able to subsidise a little bit out in the early stages gives them an asset that's going to provide along with their superannuation, and so they won't be a burden on the federal government's purse into the future. So, the anaesthetists and the surgeons and the high income earners across Australia, it's business as usual, and they'll go about buying their fifth and sixth property, right? But the mum and dad investor could be locked out on getting their first. And that to me is, if we're all about fairness and equality, I want to see those people have the opportunity that the high income earners have.
A lot of it comes down to education for me, because should the Shorten government be successful in the election and they come into play, they've put on record that as of the 1st of January 2020, there's no more negative gearing on existing properties. Now, going back to the piece in the Fin, and there was sort of like 3 weeks ago, there was all that scuttlebutt around all that, and there was backwards and forwards and whatnot. The perception that most property investors buy existing property, I think that's now largely been rectified and debunked. And I think some of the myth busted. I think the Labor government has probably removed a lot of the information from their website as a result of it. As a journo, I'm always keeping an eye on this sort of stuff. Do I have any perception towards that? No, I don't. I'm just telling you what's going on.
From 4,400 words, Phil, of this whole rhetoric about the importance of this important change policy, down to 650 words.
Okay. So if the Labor government is looking to champion putting more stock on the market, as in build more properties to keep tradies happier, to keep developers moving forward, it's a big part of the economy, the construction side, a big part of the economy, right?
Enormous.
To me, it comes back to, is it good? Is it good as an investor to buy a new build apartment or a new build house? Are they good investments? That's the question that I don't hear enough people talking about.
Yeah, so I'll answer that in two parts, right? So the first part is that the data in regards to the performance of off-the-plan apartments has been the numbers have been crunched by BIS Oxford Economics, and they were released in March of this year. And the numbers are pretty scary, Phil. So from 2011, in terms of the number of off-the-plan apartments that had zero or negative growth, so that's no valuation improvement, in fact, negative equity, in Melbourne, 66%. 2 out of 3 since 2011 have had zero or negative growth. In Brisbane, it's 48%. So 1 in 2 have experienced no growth or a loss since 2011. And Sydney, which is the most mature apartment market that we have, and it's probably 10 or 15 years ahead of Melbourne and Brisbane in regards to its density and people comfortably living in apartments, during one of its biggest ever bull runs, had 23% zero or negative growth since 2015 in the peak of the market. So that's extraordinary, and that tells you that when you're buying investment properties, you've got to be very careful. Not every property is created equal. So even if you buy in a really good suburb, it can be at greater risk of oversupply or underperformance, or developer margins improving on that. So that's the first answer to that question. The second part of my answer is in relation to, well, you would think that the industry who are responsible, and the association responsible for building, which is the Masters Builders Association of Australia, would be doing cartwheels. They'd be saying, this has got to be good policy, because it's going to make all of those property investors turn from buying existing property to buying new. Well, we've already learnt that the vast majority are still buying new now. Some are. But they did their numbers and it was catastrophic. So 42,000 less dwelling completions. So that was the downturn that they were going to see. Upwards of potentially 30,000 job losses. And in terms of where we say about how important it is to the overall economy, $11 billion in lost income for the country. So, and this is an association that you would think really would be behind something like this. Oh, no, negative gearing's still going to be available on new. So if they're telling you it's a bad idea, you've got to take counsel from these people. They are the industry. And I think that's what we have seen with Labor in terms of developing this policy. There was zero consultation with the industry. And so you've then got to say, did they really care about a level playing field, or was it the tax receipts, the tax revenues for the so-called schools and hospitals that were going to come from it, which made a very good platform to launch their campaign to get into the lodge.
So just to paint a bit of a story here, Ben has no numbers in front of there, all off the top of his head. He probably lives and breathes, and probably what you think about when you go to bed, and probably
I've been across the numbers for a little while now, Phil, a few media appearances.
He knows the numbers well, and if you're someone within the Labor Party or a Labor Party stalwart, and you're hearing what we're talking about here, you're more than welcome to come on and have a chat with me, because I'd like to actually understand this from both sides. You've said that you're pro-Labor on this because you know numbers around negative gearing, but I want to make sure we cover it off and make sure that everyone's got the opportunity to know the facts before they make any decision. But from what you just said then, two things. Number one, 2 in 3 properties in Melbourne for the last 7 years are worth less than what they were bought for. 8 years.
And deteriorating.
And deteriorating. So that's 2 in 3, 1 in 2 in Brizzy, and at best a quarter in
1 in 4
in Sydney. So buying off the plan, which we've spoken a little bit about, some people do really, really well off the plan.
Yes.
If you time everything right,
it's not a carte blanche.
It's not a carte blanche, but there's a level of risk in it. And I think what I'm trying to get at is that if the policy is around getting people to buy more new properties, even though the percentage isn't that many, it might not be the right investment. So the information is that if you're, depending what happens at the election, maybe you want to stop investing for a while at least until you actually understand how it's going to all finish. That's what I'd be sort of saying. And then for the HIA to say, oh, yeah, I'm a bit nervous about this.
Phil, this is at a time where the market's robust, or was robust. It's correcting now. And this is where the secondary market already exists.
Can you tell me about the secondary market? Because this is something that isn't being spoken a lot about, because if someone buys something off the plan to get a benefit in the market, that could be sold the next day.
Correct.
That's the secondary market.
That's the secondary market, which means no longer will that property be allowed to have negative gearing assessments on it. So that's what I was sort of making a point on in terms of some of these high-rise, medium-density off-the-plan apartment performances have been measured from purchase and sell dates, right? That's how you get those negative equity positions, right? And that's with a secondary buying market available. But these things are going to be like used cars, right? So the secondary market is not going to even be there. So that puts at even greater risk negative equity, which also then puts at risk the financial system, right? The property market represents, $6.7 trillion, right? So it's enormous in its size, and it's almost too big to fail, right? This is residential property we're talking about here. So compare that to the Australian stock market, which is around 2.3 trillion. So, it's sort of sitting at 6.7 trillion. That's 3 times the size, right?
Yeah.
So that's why it's poor policy, because you're changing the market and then you're guessing what's going to happen, right? But I can tell you that with our knowledge that the buyer behaviour is, once the investor's educated to say, well, I've heard new properties don't return as well, then that money leaves the property space. So there might be 10% of people who are gullible and get the big marketing spiel about we're going to save you tax, and they buy a new off the plan or house and land package or whatever, right? But that's 10% of the 30% that are currently investors now. So what are the other 20% going to do? And so you might say, hypothetically, 10% keep buying existing, because they do know that it's in the best locations. And I've always harped on about owner-occupier appeal. They buy with their hearts, not their heads. That's where the best capital growth is. So you might keep it. But what about that other 10%? Do they just leave the market completely? And this circles back to the whole question that Labor's saying, it's grandfathered. It's not going to affect anyone who owns existing property. That's not true. If you take 10% or 15% of the buyers out of the market, you are affecting their potential
Changes the
capital
system.
growth.
Yeah.
It changes the market completely. So, it's grandfathered, so you'll still get the tax benefit. They're not buying for the tax benefit, Labor. They're not. They're buying for the future gains and the passive income that comes from that investment. So that's my problem when you interfere, from a macro level, especially after we have seen, APRA interfered. So coming back to, Christopher Joyce, what you were saying before, I'm 100% with Christopher. This has been a manufactured correction because they have stifled the amount of investment activity in the property space. And I said, good on them. When I saw 50% of the market, new business, that's unsustainable. There's going to be a correction. We've had that correction, but Labor should also learn, and all political parties should have also learnt now, that you can manipulate the market through macro-prudential regulation. And we've done that. So to then put another sting in the tail in terms of rolling out negative gearing and capital gains changes, it's just going to be fundamentally dangerous for the property market, which subsequently flows into wealth effect, which we're seeing, which flows into consumption. And remember, consumption is 60% of the GDP, right? So what you and I spend every week rolls into 60% of our gross domestic production. So if we continue to put our hands in our pockets and do nothing and people start losing their jobs, we then go into negative growth, negative GDP, recession, right? And it's this mindset. So when Christopher Joyce says if the Liberal Party do get in, then business will be confident to make some decisions moving forward, right? Because they know what the level playing field is. They know what the playing field is. There's no radical change. If Labor gets in, businesses are still going to be a little bit apprehensive in terms of what that means for them and whether they're investing or not investing. And we saw that from the first half of last year, where GDP was growing as high as 4% annualised, and then the Liberal parties, the fools that they are, knife Turnbull in the back, and business confidence falls off a cliff. And now that we're seeing 6 months later, that business confidence falling off a cliff, and we're in a situation now where businesses are unsure. And because the political environment's unsure, and we didn't know what we were going to get. And I've said this to both political parties. I mean, you win elections in the middle, all right? Australians want good governance in the middle. They want to be able to, they want fair government. They don't want to be taxed too much. They don't want to be taxed too little. They want fair government in the middle. And we don't want extreme policy decisions or radical people controlling the mainstream of Australia, because we will rebut against it. We don't like the far left, and we don't like the far right. So in terms of ScoMo's challenge is that he's got to pick up the pieces. And the reality is the economy has fallen because business confidence has dropped off. Yeah. And if we get Labor in, we've still got a little bit of uncertainty in terms of what's going to get through the Senate, what's not going to get through the Senate. And we don't like that. We want, same with, you were talking about climate change and energy policies. We want surety. We want a system that gives business confidence to invest, and you're not going to pull the rug from under us. Same thing with property investment. When I went to buy that property 3 years ago, I didn't want negative gearing to be pulled out from under me. I didn't want the marketplace to be fundamentally changed. And that's what's going to happen. And so that's why you hear these sound bites where it's talking about property prices are going to drop and rents are going to go up.
That's true. It's a tough one because you said there's 2.1 million property investors in Australia, and we haven't even spoken about how owner-occupiers' property values are going to be impacted, and again, the wealth effect. If everyone's sitting around thinking that their property's got, if they don't invest property, they bought a home to live in, that value might not exist as much as what it did once upon a time. It's changing the whole system. The challenge I have with this secondary market is that if the spruikers get a hold of this and say you only need to invest in new because that's where you get your tax strategy in there, and you get all your negative gearing and all this sort of stuff. It's the poor person that buys that property that's sitting there going, this isn't right for me, I need out, right? And say they've bought it at $500, right? The real price is $400,000. They're taking debt at a $500,000 valuation. They're just stuck there forever because, the secondary market, someone's going to go, well, yeah, it's worth $400,000. They're going to go, well, no, it's not. It's worth $500,000 because that's what I pay for it. You stifle the whole property market, and you will stop the system moving. And to your point, you drive down everyone's value in their property.
Everyone's value. So when people say, why are you so passionate about this topic? It's because I do care about property valuations for all people. I mean, if Mr. and Mrs. Jones or Mr. and Mrs. Wang have just spent 5 years saving up their $50,000 for their deposit, for their piece of Australian dream in terms of the great Australian dream, that 3-bedroom, 4-bedroom house in the outer suburbs, and they've paid $650,000 for that property, and for the next 10, 15, 20 years, they won't even see that gain come back. Yeah. And they're paying interest on, say, sort of $500,000 over a 15, 20-year period. That interest bill is going to be $300,000 in the interest outside of the principal. So that property is going to have to owe them $900, $950 a mil. And if people start then thinking, well, why do I buy property if I don't get a return on not only the value of the asset, I'm better off renting. Yeah. I'm better off renting and then deploying my surplus cash into other investment classes. Now, that's not the Australia that I think any political party wants to see, right? But the reality is the smart money will move where the best returns are, okay? And so if the best returns aren't in property, they will go elsewhere. So I think it really plays on an important point about, when markets have rules, everyone knows what those playing rules are and everyone abides by those rules. When you bring in a radical change, it's a bit like in soccer where, if you took the offside rule out, it'd completely change the game. Well, this is that type of policy change that we're seeing across housing, that the unintended and intended consequences are going to be quite dangerous, and everyone's going to be sitting on their hands. And coming back to that story where those people have got that negative equity. If the bank calls in that loan, they lose out. Yeah. They then turn around and get the customer to pay with their own home. They then lose their home. Then they've got nothing. They've got no savings.
Effect, right,
the domino effect.
System.
And what are they? They're going to live off the pension, Phil, and they're going to live off healthcare for the rest of their life. And that couple is going to cost tens of thousands, hundreds of thousands of dollars to the tax system. So why is it a problem that 30% of people who want to invest in property don't want to be a burden on the tax system?
So you've got 2.1 million property investors that account for 2.7 million investment properties. I reckon, I'm going to pull this number out, but I reckon you've got to have, how many owner-occupiers in Australia?
Yeah, so there's 10.1 million dwellings.
Yeah.
And that grows usually around 150,000 new dwellings a year.
So 2.7 million of them are investment properties. So, you've got
30%.
30%, right?
And
so
it's just under that.
6.5 million dwellings which are owner-occupiers, so thereabouts.
Yeah.
It sounds like there's going to be the election is a referendum on property then. Pretty much.
It's definitely a line that I've used before, but it isn't getting the media traction that I thought it would, across mainstream media, that is. If I was someone who I didn't even know, I mean, if you look at the Property Council Australia and even the HIA, a lot of their people are going, I don't even know what happens with negative gearing. So it's just completely out of their line of sight. Now, the question is that, yes, this affects all property prices. It's not as if investors are quarantined in the market. Like, it's not as if when you own an investment property, you have a flag out the front of each of the investor homes, right? They're all in the same mix. And so my property is going to be worth what a comparable property in my area is worth, whether it's owner, occupier, or investor. So you're absolutely right in terms of when SQM Research did their numbers, they're talking about, corrections of around 15%. And that's tens of thousands, and in some cases, hundreds of thousands of dollars. Now, both parties are offering about $1,080 in additional tax refunds out of their income. $1,080 versus 10,000, 20, 100,000 loss in the property value.
Significance.
I reckon I'd pass.
It's a whole wealth effect, right?
Yeah. Yeah, it's so there is some material challenges with this policy, and that's why I'm anti this policy. Is there some excesses in the system? Yeah. How would I approach those? I wouldn't change negative gearing. No changes in negative gearing, but certainly in terms of the capital gains, what we don't want is speculation in the property market, right?
Yeah.
So most investors are doing the right thing. They're holding it for the long term. We don't want people to be able to come in and make a quick buck in a year or two or whatever. So you might want to reduce the amount of exemptions you get in those first couple of years and then bring it back to the 50% after 5 years or something.
There's another way it can be tinkered with or tweaked a little bit. It's interesting, and as I said beforehand, this is not a beat up on the the Labor policy from my angle. If someone wants to come on and have a chat with us, I'm more than happy to do that. But I know you've been covering a lot of ground, doing some, like, I think you're up here last week or the week before.
The housing forum.
Housing forum stuff. So you're on the ground, you've been around Canberra speaking with both sides of politics. How is this debate sitting with Labor when you actually sit there and talk about secondary markets, when you sit there and talk about overall negativity to house values across Australia? I get the idea of making housing affordable, right? But I don't even want to touch that, because there is housing affordability everywhere. Even in Sydney, there's housing affordability everywhere. If you're 25 years old, you can't live in Mossman. You're going to have to live somewhere else, right? Wait your time and do it. There's housing affordability. It's just changing the mindset. But how is this debate sitting with the Labor Party? They're saying, no, it doesn't matter. It's we've got to do this because it's the only way that we can raise more taxes to redistribute to everyone else.
So, Phil, they haven't spoken to me directly. I did reach out to try and have a meeting with them, and they politely declined. They understand our views as the Property Investors Council of Australia. That's not to say that I think there's a lot of new information that's coming to light, such as the fact that 45% of people are potentially already buying new as part of their investment strategy. So that will challenge their numbers. It'll
those numbers been corroborated though. I know you originated those numbers through the aggregator that you're part of, your business in Power Wealth. That's their numbers, and that's with AFG. And AFG has how many brokers? 15?
Well, they're the largest in the country. So they're
okay.
So 60% of all loans originate through brokers.
Yep.
And I think AFG has around that sort of 50-60% market share. So it's a good sample size. They have, I think, just under 3,000 brokers across the country.
Okay.
But then we had it corroborated with also a depreciation schedule firm.
Okay.
And they had their numbers at around 46 to 50% of the depreciation schedules they were doing for investors were for brand new properties.
Okay.
So it's pretty live, Phil. And if you think about it logically,
so I remember when you first told me that, I went, nah, there's no way in the world. There's no way in the world, right?
Well, if you think about it logically, we've just gone through a building boom, right? And so we had, I think, 190,000 completions last year, and we might even get about 210,000 completions at the end of this cycle, right? So they're not all buying, owner-occupiers aren't buying all of this apartment boom, right? Vast majority of them have been bought by investors. So if you think about that in real context, if there's 500,000 dwellings being transacted each year and 70% of those are being bought by owner-occupiers and 30 are being bought by investors, then you've got to look at the mix of what's available. That's the new stock coming on. So it's well and truly in that 40 to 50% range. I was having a chat with Graham Morabito, former CEO of CoreLogic, only earlier today, and he was saying, it's definitely in that range, right? So we've got to keep, cooperating and making sure that we can continue to evidence that, because the data that they were using was the ABS data, and the ABS says, no, we don't even model that. Right, we don't even provide that data, so it was guesswork. And now that we have that information, I would welcome any contact from the Parliamentary Budgeting Office, from Treasury, from the Labor Party to contact me, and I'll provide you with all the data I can get my hands on. And if you're in the industry and you're listening to this podcast and you have some data that you'd like to share then the more evidence we can get of that. Because what I did document in my research was that a lot of the collection of that data was being misrepresented at the collection point, saying that it was existing property when it was off the plan or newly erected. And that's obviously where the challenge lives.
Okay, so who knows where this is going to land, but I imagine most of your PICA members are probably going to vote a particular way, but, I'd like to be representative of all of Australia. I look at some of the Labor policies and it does resonate with me from a personal level. That said, the Liberal Party's got some good policies as well, so I might just sit in the middle and vote.
Donkey vote.
And vote. I won't donkey vote, but I'll find some
independent.
The Australians for like a removal of parking meters party or whatever it is. It sounds more me because I don't want to sit on either side. But I do have a vested interest as a property investor. I have a vested interest as a business owner, but also have a vested interest as an Australian who's looking for the best out of this nation. So we'll see what happens. But if you hear anything, if anyone within the corridors or power respond to you and give you any insights, you come and let us know. And But we're literally only weeks away now from I think pre-voting's open, I think, right now. You can actually
There's been a record number of people who have put their votes in. And I think one thing's, there's still a lot of water to travel under the bridge in regards to this policy framework. Mr. Bowen was saying that, a 1 January start date would allow enough consultation with industry. So I hope he's good to his word on that, because I think once he does sit down, when you've got the Property Council of Australia, the Housing Industry Association of Australia, the Masters Builders Association of Australia, the Urban Development Institute of Australia, the Real Estate Institute of Australia, all saying it's poor policy design, surely.
Does it need to get passed, though? Does it need to be past the
totally.
changes?
Yeah. It's got to go through lower house and then obviously through the Senate.
So it's just normal process, right?
So if Labor gets in, they've put an agenda forward. If they get in, they get in. But then it is about, okay, what's going to happen, because there's obviously ramifications. And later this week, we'll get to see some of their costings.
Okay.
So I'd be interested to see, that's the big thing for me, right, is are they misleading the public, or are they telling the truth? Have they adjusted their assessment to 40, 45%? I'd even take 40, right? I'll even say, and if they've adjusted that, what does that mean in terms of the so-called revenues they're going to receive? And what is the impact to house prices? Because I think if they do model it the right way, the impacts are going to be more severe than the modest ones that they were quoting from Treasury, and also the revenue receipts are going to be significantly lower. So then it becomes a moot point. Do we really need a policy that's going to be so dangerous to the broader economy at all if there's no material benefit in doing so?
All right. Good. Thanks, Ben. I appreciate your insights. And we've only really got a couple of weeks now to keep focusing on this, but we'll see how it all lands. And if you're listening to this and you've got any views either way, happy to share them. You can email the team, editor@smartpropertyinvestment.com.au. Or if you're particularly inclined to share your views, get in touch with us. I'm happy to come onto the podcast and have a chat with us and to give a balanced view of how these policies might change the world for property investors and all Australians. But Ben, thanks again for your time, mate. It's always good.
Thanks, Phil.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our morning newsletter, so the first to know what's happening in property right across Australia, smartpropertyinvestment.com.au/subscribe, or if you on social media, and that's how you like to get your info. Smart Property HQ. If you enjoy what we're doing with these podcasts, remember, press that subscribe button wherever you listen to it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.